foreign exchange market faces contending issues that require a multi-pronged approach. To address these challenges, they have continued to plague the economy, especially the manufacturing sector. Experts say prudent economic policies, foreign exchange reserves management, and policy consistency are essential to ensure stability in that market. Mr. Ayodeji is the Managing Director and Chief Business Officer with Optimus by Afrinvest. It's good to see you. Good afternoon, and thank you so much for joining us on the program.
Good afternoon, and thanks for having me.
Well, I would say naira is gaining value. Yes, gradually. We see, and I spoke to the president of APCON yesterday, and he agreed that floating of this currency is succeeding. I don't know how this comes to you.
Okay, thank you. So I think the first thing we need to notice what was done or what has been done to even achieve what we are seeing so far. And one of the major factors, when we say it's backing their words with action. So last week, for the first time in a long time, we saw the CBN clear forward transactions that matured, and they also clear backlogs. That is action. And we've also seen more engagement in terms of letting us understand a bit of what they are trying to do to resolve the problem. So that effectively took away this speculative demand that has been driving the FX. So most investors, you would see that it got to an almost high of 1,300 naira to a dollar. So within 2 weeks or 1.5 weeks, it's now almost down to $1,000, depending on the firm you are talking to. So that's almost 300 naira dollar appreciation within 2 weeks. So what I think we are seeing here is that continued communication and as well as the action, even if they are not clearing all, but when the market begins to see that signaling effect, then that will take away what we quantify about within 30 and 40% speculation before. That will take that away. Part of what I think is also responsible for what we are seeing now is a lot of those that speculated are also taking profit. People are selling. People came in at 700 naira. People came in at 600 naira in less than a year. And now selling at this current rate is still a significant profit to them. That's minimum about 40 or 50% profit to them. So I would say that it's too early to also rejoice. We need to consistently back this up with action. It needs to clear. A lot of analysts were trying to understand how this source of the dollars that made CBN increase the supply, while we're trying to see how we also bring in the $10 billion we've all been talking about. How are they going to get it? When is it coming in? So you would see that with that's about $500 million that was supplied to clear the backlogs, you can see the level of appreciation that we've seen in the market. So what now happens if the CBN is successfully able to raise between $8 to $10 billion in this market? Means that we would see further appreciation of the naira. But one thing to wrap up this, it also tells us if we can maintain this manage floating, because what we see in the past is that we don't adjust until it becomes so painful to adjust. We all know, based on the purchasing power parity, there's always that element of change or adjustment that needs to be made on a yearly basis or periodically. So if we do it as and when we're supposed to make those adjustments, we will not feel that major impact, which we're compelled to see. So I think that the area I would agree is that the managed floating can work when we adjust it as at when due, not waiting until when the market forces us to adjust the currency.
Well, Fitch and the likes of Standards & Poor's are already talking about Nigeria looking forward. It seems like we are taking some of the policies now from the IMF and World Bank, and it seems to be working for us. What do you make of this, too?
Okay, to me, I don't think they are basically IMF policies. These are logical action that could have been taken in the past, not just based on IMF making this recommendation. Like I'm rightly said, when you look at, we spoke about subsidy, it was so obvious that it's becoming unsustainable and is becoming a major form of leakage, revenue leakage in the country. So common sense just says that if you are able to take it out, because if you want to continue to block the different leakage holes, it may take more effort than trying to take it off, nothing to allow that form of revenue loss again. You spoke about the unification of the FX, and they spoke about that in their report. We have always clamored that market always wins. When there is no supply, there should have been an adjustment which would have provided confidence. We wouldn't have gotten to this level where we were or where we are if there was confidence in the market. That would have limited the speculation that would have been seen in that market if we are taking that adjustment. So I wouldn't necessarily say some of the policies we're adopting now or we're currently doing, these are things that we have spoken about several times that were supposed to have been done. And now the new change in government, change in CBN leadership, they have also seen and they are trying to make things right to ensure that we don't see that kind of volatility or that be in that situation that we were before. We believe that if there's confidence is sustained, engagement is continued. One thing I missed out was the increase in interest rates that when they supplied to OMO supplied to the foreign investors last week through OMO, increasing the return, that's the implied yield for the longer tenor was around 21%. So that effectively would also help foreign investors as they progress, that there's a return they can make here once there's stability in the FX. With all this combination, if it's sustained, and you would also, you hear me where I said if it's sustained, it's not just about one week action. If this is sustained and there's confidence, we believe that there will be stability in the naira. And the adjustment we would see adjustment periodically. It may be 5% on a yearly basis. That's the reality because we still import significantly and we are not exporting enough. So there will also be that adjustment. But once investors, even business owners, it's also important, they know that on a year-on-year basis, because of the imbalances, we need to at least depreciate or adjust the naira by about 5 to 10% on a yearly basis. It helps everyone to plan, and that planning would also help the liquidity of our FX and take away speculation.
Now, let's now look at sources of FX, because liquidity seems to be one big challenge here. What other sources do you think government can explore at this time?
I think the first one that the government needs to channel more effort on is the oil theft. At least reduce it. We're not saying eliminate it. We used to, when you look at production in the past, at least as almost as high as 1.8 million, even excluding condensates. So currently, as at September, based on the OPEC report, I think we're about 1.3 million barrels per day. That's excluding condensates. So we need to ramp up our production and reduce the oil theft. So that will create one source of steady FX. Secondly, in the immediate, there's a need to visit the Eurobonds market, at least to raise funds. That's what sustained us a bit. In the last, I think, 2 or 3 years ago, we raised about $5.2 billion from the Eurobonds market. It looks expensive at this level, but there's a need to create stability. And once we create stability, we can see how we want to create policies, where the fiscal authorities create policies that would engender businesses such that productivity would improve and we'll be able to generate revenue that will pay back. But in the immediate, we need that. And when we want to look at long-term or medium to long-term, is diversifying our FX sources to from oil to non-oil. What are those products that we currently export but is at small quantity? Can we channel more effort, create policies, blueprints that would help open up that space? One area we also need to look at is our port system. How long does it take for us to export? Some of these goods, do they go bad before they get to their destination? So if we look at the value chain, that process, we want to diversify our FX based source, the non-oil. What are the processes things we need to put in place? How do we support those farmers that generate the item? How do we subsidize them? Because they would, as they are exporting, they are generating jobs, because they also expand. Then we will now take it to a level where we want to begin to add value so that we earn more value in terms of FX from some of these items, rather than just exporting raw materials. We need to begin to now add value to them. Once we're adding value, we are not only solving FX issues, we're also creating jobs and we increase productivity. So these are some of these things I'm saying are not new. I think it's just the willingness and the willingness for us to begin to implement them, and we would see results once we are determined that we want to implement them. We should go in the last few weeks. I know the president has been trying to see how they will bring in a lot of foreign investors. Why even the domestic investors, why a lot of companies are shutting down? We need to understand the reason, remove all those inefficiencies so that we are competitive enough and we'll be able to produce more and create jobs. And as we are creating jobs, indirectly, we are taking care of insecurity, which when you look at the value chain, it will also now, once there's less insecurity, we'll begin to see more investment flowing because they feel that their investments are safe.
Interesting conversation as usual. Well, Mr. Ebo, before I let you go, I know we've gone this route before, talking about the 43 items that were under restriction or getting FX at the central bank. And now the new management has come up to say, well, you can now access FX from our windows. Two things. Some say that will add more to what is already on ground. That's talking about those waiting to be sorted with regards to with the limited forex that we have. And also the impact of that on some manufacturers that might have built capacity in some of those sectors or some of those products, I beg your pardon, before now. I want your understanding of this, please.
Okay, thanks. So what's typically, so for looking at the argument of those that are already based on companies that have built capacity in-house. But what the CBN is also trying to do is that if we continue to have these dual or bivocal markets, then we would continue to have that disparity that would be leading to more pressure on the FX. But what CBN is trying to do is, if we can bridge the gap, there was a time, I think about 4 years ago, there was no difference between the black market and in terms of rates, black market and the official markets. The manufacturers were still producing. So that is not going to be a showstopper for them, or is going to impact on business. What most of those that are clamoring for the sustaining of these 43 items, what they are looking at is that CBS should not supply them cheap dollars. But if supply improves, there will be a time that the spread between the official and the black market will not be significant, which will not impact. So they could have still gone to the unofficial market and get dollars and still import. It's still the same impact that it will have. But I think the focus where the fiscal authority now comes in is for them to now see how can they reduce the cost of production. How can they reduce some inefficiencies for them to have more room for margin? I think that should be the kind of conversation, because most times in this country, we try to punish ourselves ahead of when we are self-sufficient. For cars, you see the tariff because we're trying to see how we want to be producing cars in Nigeria. But you pay at twice the tariff for a car that you are importing. When do we know that we're going to be self-sufficient in producing cars? But people are paying out of pocket significantly now because we're trying to protect the industry. So there are other ways that we can reduce the cost of production to make these companies more competitive, rather than using tariffs at times or trying to have a different market for them. What I feel will happen now is, imagine the activity that goes on in the Eurobond market on a daily basis. It's estimated about maybe 30% of Eurobonds are held by domestic investors here. That is also going to increase supply and create more activity in the FX window. And based on some pillars that are doing that, even the BDCs will be integrated to the foreign exchange market on the FMDQ, if that is true. So as we progress, we would have one market that is efficient. You can see the different rates in those markets, and that will create price discovery and transparency. And as long as the CBN continue to adjust as when they are supposed to do, we won't come into a situation where we're having up to 100 naira to 300 naira spread anymore.
Interesting stuff. How soon do you see FDIs start to trickle in? As you said, the president is very, very serious about this, bringing in investment.
You know, it's always difficult to build confidence. It's easier to break it. So I would say that they want to seek that consistency for almost between 6 months and 1 year, except if we see a major drop in rates next year. That is when they will be willing to come and take more risk. But it's too early to begin to expect foreign investors to bring in funds at this time. They will want to see that consistency and plead with government. Consistency is key. Before we make policies, let's ensure that these policies are here to stay. Now you look at the oil and gas space, we said we're taking subsidy. Currently, we don't know if subsidies has returned. It's really not clear. On the FX, if not for the recent time that things have improved, it was almost a reversal that we're going back to the fixed FX regime. So some of this inconsistency will scare away investors. We need to tell that one story. This is where we're going. This is what we believe. This is our policy stance. Once investors can see that, and they can see that once you make a statement, you stand by it, and you see the result, you can make adjustments as you progress, then we'll begin to attract foreign investors.
I must thank you so much, Managing Director, Chief Business Officer at Afrinvest, Optimus by Afrinvest. Thank you so much, Mr. Ayodeji. It's good to have you on the program as usual.
Always my pleasure. Thanks for having me.